This is back roads of Illinois server to farmers and ranchers in central Illinois and the Midwest on KSIR in Fort Morgan, Colorado. This is the Markets Club. I am Cesar Delgado. This harvest season is approaching and the midterm is here, but the fertilizer dilemma is like Groundhog Day to the farmers about the fertilizer markets. He is joining me as Arlan Suderlmann from StoneX. He is a chief economist for StoneX. Do you have any concerns about these trade for the grains markets and the cattle markets for this world issues and ranchers are concerned about this cattle markets is getting lower? I am joining with Garrtte Andorfe from Ag Markets. He is a livestock specialist for agmarkets.net. Wheat harvest is over in the Central Plains of Minnesota, southern Illinois. What is the fundamentals on Minneapolis wheat? We are heard about poor quality on the wheat, and we are very wet in central Illinois and Iowa, Indiana. I am joining with Duwanye Busses from Bolt Marketing LLC. This is the Markets Club podcast. This harvest season is approaching and the midterm is here, but the fertilizer dilemma is like Groundhog Day to the farmers about the fertilizer markets. He is joining me as Arlan Suderlmann from StoneX. He is a chief economist for StoneX. Hey, Arlan, how are you?
I'm doing great, Cesar. It's great to be back with you once again, and there's certainly a lot that we can talk about.
Yes, it does. Arlan, fertilizer dilemma is like Groundhog Day to the farmers that the Strait of Hormuz is strictly closed after the ceasefire in the Middle East. What is your thoughts about inputs cost for this fall?
Well, that's a great question. And when I look at input costs, I'm looking primarily at price of diesel and the price of fertilizer. Diesel for the fall harvest, the price of fertilizer as we look forward to the 2027 crop. So, of course, a lot of farmers in the Midwest like to apply their nitrogen fertilizer in the fall after harvest. So they like to get those supplies. And globally, this is a big time over the next several months for shipments traditionally out of the Persian Gulf through the Strait of Hormuz. We are seeing an occasional cargo get through the Strait of Hormuz, but it's largely been restricted. So that raises a lot of concerns. Now, we saw a big explosion higher in fertilizer prices when this war broke out at the end of February, largely because of fears of shortages, but most of the fertilizer necessary for the Northern Hemisphere crops were already in position. So it turned out to not be that big of a situation. At the time, China was restricting exports. And now, as we look at the strait being closed again, now largely, that raises those fears again because we still don't have supplies in place for 2027 crops. One big change, though, is China has opened its borders for exports of fertilizer, and we're talking primarily here about the nitrogen fertilizers. And China is significantly increasing that supply. Can it fully meet the demand that is out there? I think one of the keys will be to watch Brazil. Brazil, of course, has its soybean growing season coming up here shortly. They'll start planting in the next 2 to 3 weeks. And of course, they don't need nitrogen fertilizer for that. They do have a small corn crop that they plant along with the soybeans, but their big corn production is the winter corn production that they plant end of January and February, and they'll start shipment for that soon. How much trouble do they have? They'll be the next ones really on the world market, really trying to buy that nitrogen fertilizer. If they're able to get adequate supplies, that'll be a good sign for here, the U.S. farmer here. If they're not, then that means they're going to be bidding up for some of those same supplies. And that means we could see another increase in fertilizer prices or rebound in prices for the U.S. farmer. So that's what we're keeping our eyes on right now. On the fuel side, yes, part of that is because of the Strait of Hormuz being closed, but I think the bigger component is what's happening in the Black Sea with the destruction uh, of Russia's energy infrastructure by Ukraine, as it has been striking deep into Russia, hitting refineries, hitting its export terminals, and basically shutting down Russia's ability to produce sufficient levels of diesel fuel. So Russia was the number two exporter of diesel fuel in the world prior to this war. They have now suspended exports and they have started to import fuel. So while they were a major supplier of diesel fuel in the world, now they are competing against other countries to try to buy diesel from the remaining exporters out there. Who's the remaining exporters? The United States is one of those. We're seeing record exports of diesel right now. The latest data available for the first week of August is we exported 1.9 million barrels per day in the first week of August of diesel fuel. That's diesel that's being bid away from the American farmer, the American trucker, by other countries coming to buy it from us. And so that's why our diesel prices are high. We do see some sense that we might see some relief as Europe is able to bring some refining capacity back online. But overall, I think thinks that that may reduce U.S. exports somewhat. But keep in mind that Brazil is one of those customers of Russia for diesel. Their planting season is coming up, and they normally import about 20% of their diesel, usually getting it from Russia. But with Russia no longer exporting, they come to the United States, and they're one of those countries trying to buy from us. And so we very well may see high diesel prices now carry on through the harvest season, unfortunately, and that's poor timing for us.
What is your position on diesel prices for this harvest season in the Midwest?
Yeah, I think those cash diesel prices are probably going to remain elevated. If we can improve the European production, that may reduce a little bit of the demand from us to hit that. But it's going to come down to whether Brazil has what they need or not, or whether they're going to need to continue to pull. But unfortunately, right now, I fear that diesel prices are going to remain elevated.
The crop are looking good, but it's not a trend yield. What is the fundamentals on the corn markets?
Well, as we look at this year's crops, they're certainly not what last year's crop was. We do have some very good crops out there, and we have some problem areas. We had two competing weather drivers this year, the strong El Nino, which tends to give us high yields. And the other thing was what we call a negative PDO, negative Pacific Decadal Oscillation Index, which means colder waters in the Gulf of Alaska versus further to the south and to the west. That tends to give us low yields, and those two forces kept opposing each other. So we had heat move into the Midwest and quickly move back out, move in and move back out. As we've gotten into August, El Nino has taken the stronger hand. We've started seeing warmer waters in the Gulf of Alaska to weaken the negative PDO. And so we've seen more mild temperatures come into the Midwest, but also bring significant rains, particularly in that region from really from Illinois east into in the early parts of Iowa as well, but especially the eastern Midwest, Illinois, Indiana, Ohio, flooding rains, and that's been a real problem. Now, the crops have delayed maturity, and particularly in the eastern Midwest, which which means, yes, damage can be done, but it also means time can be made up in some cases as well, depending on whether you're directly damaged or you're on the peripheral areas. So some areas will probably see some deterioration, other areas will see some improvement. I think the month of August and the temperature regime we have here should help with more mild temperatures. Heat, for the most part, kept to the west. That should help. We still have some drier areas in the west that are still struggling, although more of those are getting rain. In some cases, it's too late. In some cases, they can still benefit. But the key thing from this point forward is going to be how we finish filling the pods. How do we finish filling those ears? What is our seed size going to be? A 5 to 10% change in seed size is difficult to see with the eye, but it shows up in the combine. If it's a larger seed, that means higher yields. If it's smaller seed means smaller yields. Overall, I would say we're looking at more of an average crop year. If it ends up being less than that, I think we've got strong enough demand that that may require some rationing of the demand with higher cash prices. If we can bump above, then maybe not. But at this point, I think there's probably a little more risk that we fall below of those expectations, and the demand will create some better pricing opportunities.
We have Tyson plant is closed for last week in west central Illinois nearby Galberg, Illinois on Friday morning. What is your concern about the cattle industry?
Yeah, that's really reflective of the tight supplies of cattle we have here. We've been at overcapacity because of this contraction in the cow herd that we've seen in recent years, reducing the number of cattle that are available for harvest and reducing the number of plants necessary to do that. And then when we closed the Mexican border because of the New World screwworm, that further reduced the supply of cattle by anywhere from 1.2 to 1.4 million head per year. So particularly plants in the southern plains, that's where we first started seeing the closures. And now, as you said, it spread to other areas as well. The concern was that as long as we remained at these tight levels, that we might lose some of that packing capacity permanently, so that when we do rebuild the cow herd, we don't have enough packing capacity at that point to handle it. That gives the packer the advantages in competing for those available supplies at that point. The good news is that the Fort Morgan, Colorado plant looks like it's going to reopen soon. So that'll add a little bit of packing capacity. As of right now, we do have adequate capacity because our numbers are so. But as we get over the coming week, we're going to see the border with Mexico slowly start to reopen, bringing some cattle back to the north. Will that bring back more packing capacity? That depends on the number of cattle that come north. While that border's been closed, Brazil has invested, by reports I've seen, over $1 billion in developing its packing industry. So it may try to keep those cattle, or at least a large portion of them, in Mexico. And if that's the case, we may have trouble bringing back some of the packing capacity here in the United States.
How is the fundamentals on the hogs markets?
I'd say for both cattle and hogs, both beef and pork, we've seen a lot of a pullback in demand for protein from levels that's very high, extreme record high levels it was last winter and early spring. Still solid overall, but pulled back from where it was. And that's caused both cattle and the hog markets to pull back. I think sentiment is still rather weak. For a long time this year, we had positive crush margins for the hog industry where feeders were able to lock in some profits, but we've kind of lost that now. And so the question is, how much will they pull back on farrowing and feeding going forward? We'll have to watch the quarterly hogs and pigs report surveys for that. But we don't have the positive economics in the hog market anymore to support that. We did see a little bit of firming here of late in this market as we try to get a balance, hoping that as we get into the fall and Labor Day weekend, et cetera, we can improve demand a little bit. But overall, we need to see that demand for protein start to come back from the consumer.
Do you have any final thoughts on this harvest season?
Well, I think overall the expectation that it's going to be above normal temperatures for the harvest season, and that's good because that generally says we can dry the grain out in the field. But the other thing is forecasters expect it to be maybe a more showery pattern as we get into the fall. So that may delay some of the harvestability and may make it harder to get it harvested in a timely manner. The good news is we talked about earlier how high diesel prices is. When you look at propane supplies, they're up over 30% over what we normally see for this time of year, propane being one of the primary fuels used for drying corn and in our grain dryers. And so the good news is there looks like if we do need to dry it, we'll have plenty of supply of propane there to run those dryers and hopefully at a very economical price to do so.
Thanks, Arlan, and congratulations on your retirement. I enjoyed to work with you for the last couple years. I will see you in Kansas City for one more time on the show.
Thank you, Cesar. I've really enjoyed working with you these last couple of years, and I look forward to seeing you in Kansas City in November.
This is Arlan Suderlmann from Stone. Do you have any concerns about these trade for the grains markets and the cattle markets for this world issues, and ranchers are concerned about this cattle markets is getting lower? I am joining with Garrtte Andorfe from Ag Markets. He is a livestock specialist for agmarkets.net. Hey Garrette, how are you, and welcome to the show.
Hey, Caesar, I'm good. Just kind of going over some of those first questions there. Do I have any concerns for the trades? I think the grains have actually found some good support following that Wasde that we had last week. It was good to see. Now, one thing when you see corn rise up like that is it does put a little bit of pressure on those feeders, specifically the guys that are trying to maybe prolong if they're getting a little nervous with what this market has done the last 3 weeks of kind of a downtrend coming towards some lows we've seen previously. If they're wanting to hold on to those cattle, say into October, well, then all of a sudden cost of gain starts to become a big topic. So, yeah, I'm not so concerned about it as we're still at levels very similar for the cash where we were a year ago. Looking at feeder cattle, and the grain markets are a lot better than a year ago coming into this harvest. So I think this year is pretty positive as far as markets go for producers.
Are you watching the crop tour?
Yes, yep. I have been watching it a little bit. Not quite as intently as some others might be, but I did know that when they were out in Ohio and Nebraska, that the corn was coming in lower. One thing that was kind of being stated there was, Nebraska was really dry. And down in that Ohio range, it seems like they were a part of getting a lot of moisture. Soybeans, kind of big concern on that, but it actually was the corn that they came in just a little bit lower on yield with corn, soybean pod counts lower in Nebraska as well. Hearing today they're going to be in kind of Iowa, shooting from Nebraska into Iowa. I've been talking to some producers around there. It's very spotty. Some spots look really rough. Other spots look really good. And so I think that's going to be just day by day, we're really going to see just the impact of spotty weather patterns that we've had from North Dakota all the way south. There's not too many producers you talk to that say that their rainfall is pretty level to a neighbor just north of them a few miles.
Of course, we've been wet in central Illinois. Okay. Garrett, could you explain to our audience that what's latest news on the cattle markets? It seems like to be lower and the fundamentals trends is shorter. Could you describe it?
Yeah. We've been in a downtrend. It's what it is. There's been just heavier news. Honestly, since June right into July is when we really started to see this downtrend. That was leading into some screwworm talks, screwworm into the United States, leading into an announcement that we're going to open a port in Douglas, Arizona. That's coming up next week. August 24th is when that port is set to open. It's supposed to be about 500 head a day. Nothing crazy. They're just trying to get some Mexican cattle across the border. Some recent news, Tyson is minimizing its beef facilities. They're getting rid of one in Utah and Illinois. Just cutting back. It seems like the beef sector is their least profitable. And we saw it when they closed Lexington. Now they're closing these two. About 2,500 employees are going to be out of a job. Nobody likes to hear that. Some good news on the packing side, though, is yesterday, the Cargill Fort Morgan, Colorado plant that's been closed for quite some time now. The workers and the local union went on strike. They're actually announcing they signed to open the doors again, get back to work. They're actually set to get back into the building August 24th, but they won't start processing till about early September. Probably first week of September, somewhere in there. I don't know, haven't heard too much if they're going to start right away on full capacity kill or not, but it's good to have that back open.
How about the technical aspects on the deferred contracts with Tyson's plants in central Illinois?
Looking at your technicals, that's when we got that news is when we set the lows there. I mean, if you're looking at August of 27, we set contract lows, but we had, the news was heavy. The news was heavy, same as when Lexington closed for Nebraska. It struck a little bit of concern. Don't know if I want to call it full fear, but I would say concern in the markets of where this packing industry is going for producers of a cow calf. If you're looking at live cattle, there's a lot of guys that were feeding really heavy. We had the kill weights were up tremendous. Your carcass weights were record highs, and now there's a lot of guys concerned about having lots filled up with nowhere to take them with these plants closing. That's why I think it's very important that Fort Morgan did open back up. It is a relief to some of those guys. So we'll have to see what happens going forward with the plants that are closing. If there's a future for them or if they stay closed.
How is the housing market and the credit card debt consolidation of this year with the cattle markets?
Well, how that's connected is your housing market this year is on the decline. Hate to say it, but it's kind of stuck. The mortgage rates are elevated. You've been seeing it all over the news. They're starting to throw out the word crisis in front or behind it. It's not looking good. And when you get into situations like that and mortgage rates are increasing and people are struggling to pay mortgages and that's on the rise, they kind of hand in hand, you do tend to see the credit card debt grow. lower credit cards being paid off, more usage of them. And it's just people trying to get by. How that's with the cattle market. I mean, if you're looking at beef herd, we're record lows. Is that have some sort of correlation? I'm not sure. I don't see that. That it's could be something that is on a back end that I'm could have found, might have missed. But I think macro, the commodity linkage is more so kind of looking at, is this cattle market following housing market more so the stock markets? There's lots of different consolidation in each of these sectors, but I think the demands outrun for both. You know, people are trying to sell houses. People are trying to buy cattle. It's kind of inversed. Would be the best word for that.
Ironically, do you have some concerns in the economy in general, like in the stock markets and fuel costs, food prices, job markets?
Yeah, I mean, do I have concerns? Absolutely. I'm a younger broker. I'm 26. I'm trying to buy a house. I rodeo, so $5.30 diesel hurts the pocketbooks when you're trying to get down the road every week. And um, I'm not the best cook, but when I do try, the grocery bill is pretty hefty. It's a lot of it's tough, but it's doable, and I think that the outside factors. I mean, two wars going on right now, fuel prices elevated. Yes, absolutely. Grocery prices, actively working on that. And I'm not. The USDA has been. Walmart lowered their beef prices. They price matching. That's very good to see. It's helping the person that's trying to make groceries affordable. Now the big thing is making these groceries affordable without really hurting the producers, such as your cattle producers, your cow calf into the feeders, making sure your processing plants aren't in the red too much to where they take drastic measures like we saw with Tyson cutting two plants. It's the biggest teeter-totter to try and balance. It really is. And so do I have all the answers of how to fix it? Not at all. But is it concerning? Slightly. Yes. For me at least.
Mm, 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 mm. What is your final thoughts about the beef demand for this Labor Day weekend?
There's been some reports kind of looking at a year over year of beef demand and beef sales. It looks like we're steady to slightly decreasing year over year, where the last 2 years have seen pretty big percentage increases. But one thing is it's just been proven and supported through a lot of different social groups, from in the cities to the country. Big health is they push protein, big protein push right now, big beef push. Beef is back. I think it's going to be a good Labor Day. I think there's going to be a lot of girls going, hoping the weather's good for everyone. That helps a lot. If they can be outside with family and friends and grilling, and it helps push that demand even more. So I think it'll still be a good Labor Day for the beef demand.
Thanks. Wheat harvest is over in the central plains of Minnesota, southern Illinois. What is the fundamentals on Minneapolis wheat? We are heard about poor quality on the wheat, and we are very wet in central Illinois and Iowa, Indiana. I am joining with Duwanye Busses from Bolt Marketing LLC. Hey buddy, how was your wheat harvest?
It actually went pretty well up here. Dry and warm, at least low to mid 80s. Not much for moisture, like I mentioned. So it went fairly fast. Most of the guys are wrapping up around here. So it went really well.
Duwanye, let's start with our discussion on the wheat markets for spring wheat, of course, Minneapolis wheat. What is your thoughts on the fundamentals on Minneapolis wheat?
In general, I'm a little bit friendly on the fundamentals of Minneapolis wheat. Our supply is going to be down year over year, but we still have some pretty good yields up here. Let me kind of back up. Our spring was cool and plenty of moisture, so the wheat had huge potential yield wise. We did get hot and dry later in the year. A lot of the northern plains did. And that definitely took the top end off of some of the yield. Got guys up around the Grand Forks area, kind of disappointed with their yields, but still like 60 bushels an acre type there. Right around home, Ryan Wagner, who you've got him on this show, I think he was in the mid 70s for his farm yield. So that was spectacular. It's probably some of the highest I've heard. Some in the 60s. Get further west, that drought kind of kicked in a little sooner than here. So the yields came off a little bit. So I'm rambling, but I guess I'm going to say we had a good crop. The protein's really good up here. But I think as far as the wheat market goes, this is a different animal right now. It's not about U.S. supply. U.S. supply is going to be down overall total wheat year over year, down to levels we actually haven't seen in a while because of less acres. But really, I think it's the Russia-Ukraine war over there that's really going to have this market pretty fired up here post-harvest. Just recently, I've kind of read that Russia's not defaulting, but they can't get the wheat out, of course, and so they can't get it to Egypt, a few of their other key buyers over there in the Black Sea area. And that's going to start to be a problem, but it's hard to get too bullish here with our wheat market until we see some export demand increase because of the Russia-Ukraine war. We just haven't seen that yet, but I think it's coming, or at least the world's going to have to shuffle wheat around because of this war.
What is your thoughts on the fundamentals with Chicago? Wheat is in the east with southern Illinois and Indiana.
Yeah, the Chicago wheat area quality wasn't as good because, like you mentioned, really wet this year, so they got a little bit of quality issues. But with spring wheat having the high protein and high quality, that'll work out well blending that wheat together. Kind of the same deal. Chicago wheat is more the wheat that we're going to look at as far as the fund traders, the large speculative traders. And that's kind of what I mean. I think that's the market that can kind of run higher here. And it's, a little closer to the recent highs too. We're right at like $7 a day for December corn, December wheat. I think we can eventually take out the highs. I'd like to see some export demand increase before we do it, but I think the market wants to run. I think the funds want to be long, worried about Russia, Ukraine. And I think what they'll do is probably overdo it. You could see like wheat get to 750, I think, on the nearby Chicago contracts. And that's going to outprice us out of any of this export business. So those rallies will need to be sold, I believe. But like I said, at least I'm thinking we can go higher here. Like I said, the problem is we won't export anymore if the price goes up. But the U.S. dollar going lower, and that trend should continue as well. So that might help our wheat export markets longer term. So I'm bullish the wheat market from here.
Of course, it's pretty warm, but it's pretty wet.
It sure is. I know. I'm curious, there's been a lot of storms recently and talk that, it could be, reduced yields. We'll see. For the most part, my thoughts are like for this week and last week that it rained a lot in like your area, central Illinois, but it's raining during the month of August. I'm a little bearish to soybean complex, or not really bearish to soybean complex. I shouldn't say that because that market's just on fire due to fund buying. But I kind of wonder if the soybean yield doesn't have time to correct itself higher yet again. And that's because of these rains we're talking about in August. I've heard some people talk about wet feet and in soybeans, and boy, we know all about that in the Dakotas. But I think that comes early on in crop development, June, July. But rains in August usually make for higher bean yield. So, but we will see. But you're right, boy, it's been hot and wet.
We've been wet in central Illinois and northwest Indiana. It's my backyard. You're driving to 60 miles from my town, Ottawa, to Valparaiso, Indiana on 80. They had tornado damages and flooding from these storms. Are you concerned about the corn yield on September report?
I am a little bit. I'm not really bullish due to the storm damage. I mean, and I say that lighthearted because, man, as a producer myself, if you're the one with the damage, it feels horrible, and you think the market should double in value because you don't have a crop anymore. But we lose some crop in the U.S. every year. This was a derecho event, I believe people called it that, and those are the ones that can definitely change production, but in general, this late in the year, I think it hurt the yield a little bit. But I think the bigger thing that hurt the corn yield and what will lower the corn yield in the September USDA report is the hot, dry conditions in July, especially the warm nights. The crop just got pushed a little too fast, didn't have time to rest that night and recuperate. And that's where you're seeing the tip backs and the disappointing yields we've seen in like the Pro Farmer Crop Tour this week. So yeah, I am concerned for the corn yield.
Today is Thursday. It's one more day of the crop tour in the Midwest. What is your position on the corn yield?
It's definitely drifting lower as the week goes on. I was not surprised with my home state of South Dakota with the 149 I think they came up with. And I should point out, that's not their official number yet. What they do is go through, gather their samples. That 149 they printed, Monday night, that's just the average of all those numbers. But that didn't surprise me. Southeast South Dakota has been hot and dry. It's kind of one of the tougher spots of the state. And then as you go west, it's tough as well. But luckily for me, in the Northeast South Dakota, we've had enough rain and the crop looks super. I don't know if it's record, but it's right up there. But yeah, as that crop tour went on this week, they've all been lower than the trade expected. And it shows in the market too, right? I keep thinking we're due for a pullback, a little overbought on these markets, but every night it gets fed with some more bullish news. I was really surprised with your home state there. The average of their data from Illinois was 184. That's quite a bit lower than last year, which we're expecting. USDA is expecting the yield to be lower, and they came in with a 180. So it'll be interesting to see what Pro Farmer, actually says their overall yield will be. I think that's Friday afternoon. They announced that, but I think the corn yield is drifting lower, and I think the market is anticipating that, and the funds are buying, and the funds want to be long, and it's just this nice. It could be makeup of this bullish cycle where energy prices need to go higher, the dollar might go lower to kind of offset the U.S. debt. We're in a fun situation for a producer right now, and I think they can be patient.
Yeah, corn futures is being bullish.
Yeah, that is definitely a big yes to that, and that's a fun, good thing. Closing today, this Thursday, just above $5. I kind of think it'll be hard to hold that $5 psychological mark before the weekend, even with more bullish numbers. But the trend is definitely up, and the key is always not really the yield so much as the funds, and the funds want to be long again, it seems like, and we'll kind of just ride their coattails until they're done buying it.
We have Tyson plant is closed for last week in west central Illinois nearby Galberg, Illinois on Friday morning. What is your concern about the cattle industry as a cattle producer?
Yeah, that's been a pretty strategic move by the Packers to close plants here and there. I think it's important to point out that, they are closing a few, mostly smaller plants in locations where there's not as many cattle. So it's not the biggest plants. Now, the Lexington plant in Nebraska, that was a big one to close, but that was an older plant too. Um, People don't talk about, they are building a couple plants, coming up too. So they're just trying to be more efficient and therefore make more money. But boy, those headlines really do shake the market, and I understand. But Packer profit margins have increased sharply this week. Box beef cutouts just raged higher here in the middle of the week. I think Packers are actually showing profits right now with the cattle they buy, at least from last week's 232 on average price. I think they're making money with, well, I know they are, where the boxes are this week. So overall, I mean, we can't have Packers lose money forever. They will keep doing things like this to try to make more money. But yeah, it's a bummer they closed some plants, because what that does is give them more control when the cattle inventory finally increases, because they can only kill so much at a time. So it's kind of bearish longer term that they're closing these plants. In the short term, it actually really doesn't matter.
How is the cash cattle side in the north?
It's been drifting lower. It's been kind of bearish. It was, like I said, on average, I think, well, I think that was nationwide, it was 232, but we're in the 226, 228 this week. I've seen on light trade so far. I think that's going to hold and maybe be a short-term low. Like I said, if Packers start making money, the cattle inventory hasn't changed a lot. They're still going to have to bid up for it if guys in feedlots can dig their heels in and wait. So, but yeah, it's definitely been trending lower the last month and a half. And I think everyone kind of knows that it's kind of a cycle thing. We're going to probably see some pressure going into this fall a little bit, but the numbers are still tight. We can come around. I think it's next week. Mexican border opens up in Arizona, and I think it's Douglas, Arizona. So again, won't be a flood of cattle coming in, but it's still just a psychological negative headline for the cattle market to absorb.
What is your final thoughts on this crop tours in Minnesota and Iowa, South Dakota?
Yeah, final thoughts are that I think I'm going to have to lower my corn yield down. I was kind of proud. I was kind of down around the 180 a little bit earlier, so I was on the lower end of thins, but maybe that's because I'm closer to the drought areas. North Dakota is horrible. Not too many people talk about it, but they haven't had the rains this year at all. Some areas like 10 to 15% of normal, right? Like it's really bad. So I'm drifting it lower, especially after these crop tours. It's been kind of fun to watch. I always enjoy this week. I like seeing the summaries at the end, but I like watching the social media, the pictures of the ears and everyone talking about how many, the pod counts, things like that. But overall, I think yields are coming down in corn. I'm going to argue just a little bit on the soybean side, and not really argue. It's just the pod counts are down year over year, but I think it still has potential. It's really tough to guess the yield in soybeans, even on my own farm until the combine rolls. But North Dakota will definitely pull the national average down. But yeah, so soybean yield is still a question mark for me, but corn lower.
Thanks, Duwanye. I enjoyed our conversation. Are you ready for some football, Coach?
Yeah, absolutely. Yep. Nope. I coached some baseball or helped there and coached a little football or a high school team. And yet we've got a game tomorrow, actually. Kind of excited about it. Yeah, boys should look all right. It's always tough to lose the seniors from last year, but it's fun to watch the young underclassmen grow and get stronger. So, oh yeah, always ready for football. It's my favorite time of year.
What is your high school team?
Britain Hecla Braves.
Go Braves.
Thank you, Guy.
I bet the Vikings is getting not great.
Yeah, that's I'm definitely a Vikings fan too, and yeah, that'll I'll see how that goes this year. Yeah, those Chicago Bears, everyone's talking about how their offense is going to be looking to break records, and I'm like, yeah, I don't know. We'll see. Being a Vikings fan, I'm still going to root for the purple here.
Thanks again.
Yeah, thanks for having me.
This is Duwanye Busses from Bolt Marketing LLC.